Hello, everyone. Good pre-Christmas Eve day. It's the only day we'll be broadcasting this week. Oh, no wonder. That's where our president gets all of his tweeting material. Huh, interesting. So, guys, oh, hi, Brock. How are you? So, here's my Christmas wish for all of you guys. Fine, Brock. Thanks for asking. I'm dreaming of a green Christmas with volatility we used to know. May your days be merry and green as you read our analysis on your screen. Merry Christmas, everybody. Don't forget to read our analysis on your screen. Canada. Talked about it before the bad number on Friday. Blake had shown it earlier in the week at a major triangle support level. We had this divergence developing here before the negative data. Steve said, yeah, good risk reward. Look at what happened last night. It pulled back right to the wedge line. It's holding. Could get another test. I'd say as long as we hold its 3120 level, there's still more upside, maybe to here. And then this is going to be major on Canada. And you don't hear a lot of people talking about it because everyone's in the bearish dollar camp. So there will be a breakout of a triangle up here at 3260. So, or there could be a failure under 3020. Anyway, when you think about it, this is just trying to get an edge on what might happen to the upside. Then on Friday as well, I talked about the 3 drive formation that we had in oil. That was here, 1, 2, 3. What's interesting is during the session on Friday, it tried to negate it, by taking out this high, but then look at this candle. So pretty good selling pressure. Look at this volume spike to the downside. And I actually thought we could get this failure. I talked about the big round number at 60, the confluence of some moving averages and the throwover line. So far it's holding. Um, I think that we're going to take out this blue rollover line eventually. This may not be a bad area if you're flat, to attempt some shorts with stops over the high. Because once we're back in here, back inside the throwover, see this? Plus, even though it's a kind of thin week with Christmas and everyone being away, we're already under the 2-week off number. It's up at 6105. So if by the end of the week, and we had a 2-week reversal here because we closed under this. So we'll see if last week's signal, which was mainly Friday, ends up being a precursor for the market taking this out. I think this could be part of a risk off scenario if we get it back inside here. So another great year. No, I just go out live and pay people to listen to me, Forex Gal. Buy a drink or two, eat something. Merry Christmas, everybody. Thank you for your loyalty. And I tweeted something. I know we're all caught up in materialism, but you know, where is that? It's really the best gift you could give anybody. There's nothing wrong with maybe going out and buying a car for your spouse, but the real gifts are that I'm going to be focused on are love, kindness, and peace. Okay. We could use a little bit more of this kindness, just kindness in America. How hard is it to be kind to each other? Why is it so hard to be kind to each other? So I don't have any New Year's resolutions. Okay. So I'll be lost. What about cable? There we go. I'm going to let Stell and Blake. I don't know. We'll ask that. Could I mentor you for a minute, FX Cole? Okay, just for a second. All right. First of all, are you a subscriber? It really doesn't matter. But you know what you really have to focus on is whether you're long. Okay, whether you're so if you were a subscriber, you'd have that answered, plus a lot of other benefits. But this has nothing to do with subscribing. Focus on what you're doing. Okay. Not as much looking for validation or just coattailing people, and you don't even understand the reasons why the trade was recommended. So if you ever want to learn to trade on your own, you have to know the whys behind the trade, not just if someone's still long or short. And I say this respectfully, okay? So concentrate, find something. I know you're trying to learn, and it's not easy, okay? So the best way to learn is on a demo account or trade micros and find something that you like where you could start to recognize it and just spend time. And just like being patient in the market, you have to be patient with yourself if you're new. Okay, don't expect to set the world on fire right away. Your first step is learning to design a trade and staying above water because it takes time. I mean, even if you want to become a plumber, you still have to be an apprentice and then a journeyman before you're a master. It's no different in trading. I'm still trying to become a master after 4 decades. Okay, so be patient with yourself. Don't worry about what everyone else is doing. Focus on what you're doing because you're not going to be able to follow everyone around everywhere anyway. People come and go. You want to learn to be independent of everyone. And then you follow other people's work for intelligence gathering and maybe open your eye to something new. Okay? You're not a grasshopper. You're a butterfly, Forex gal. So Blake, this last session of the week, what do you have to say to the peanut gallery?
Well, it's almost Christmas. So thank God I'm ready for this year to be over.
I'd second that motion.
Man, I mean, it's like you sit here and you look at the stock market just ripping into your end. It's like just ridiculous. It's like it really is it's ridiculous. It's like, all right. It's the last year, same situation.
It's Groundhog Day for many years.
What's that?
Like Groundhog Day, the movie, for many years.
It is. It's just silly. So, I mean, you just watch this market and you're like, well, who's gonna? And we were just talking about it in the chat room. It's like, who's gonna stand in the way of the equity markets right now? There's no reason to. So
yeah, I can't even find divergences. So I mean, that's I have no reason except, wow, is it high? And there's an eclipse on Thursday.
Right. That's
what I mean?
that's.
What do you think? That Santa might be eclipsed?
Yeah, I mean, no, that's it. Well, I think if you're using
there's still weekly divergence. It's the only TF that has any non-confirmation. I think even the daily, and it didn't look like the daily was going to confirm again, but it's right there again. And the weekly's there. That's only glaring divergence left on the chart. You have to go out to
But do you
weekly.
think that's gonna stop it? You know what I mean?
Well, it hasn't stopped it for a year.
What's that?
It hasn't stopped it for a year. It's been diverging for, a few years.
Yeah,
That's
yeah,
what I mean, No, you need to start having momentum divergences, I believe, on shorter term TFs than weekly. Okay, because you'll go broke waiting for a turn if you trade a weekly divergence. So
yeah. So the stock market's just cruising higher into the beginning of the year, and what I've seen in past years, you've seen a lot of you see a lot of turns, the first couple weeks, but you got to get past the first
Year.
of the first of January and see where
Yeah.
the market's at and where it's going. And you look at the S&P, and like I said on the week ahead video, the 3,300 level seems like a realistic expectation for equities. So,
What about currencies here?
well, the euro dollar is still consolidating down here. We're not doing much in the euro. I mean, it
Kind of
rejected the
looks
200.
vulnerable, doesn't it, bro?
What's
I mean,
that?
it looks vulnerable to
It
me.
does. We're holding the 618. We touched it last week. We might push below it today. You might see it, break below the 618 here, and maybe take us down to 110. That's quite possible.
Do you think we could make new lows going into New Year's or early in the year, like a 108-ish? Is that a viable scenario?
I mean, why not? I mean, there's no one's going to stand in the way. That's the key here, right? That who's gonna step in. So it just depends on how much selling pressure there is, and how many people just throw up their hands and say, I'm done.
Maybe it's going to be the yield chart that tells us, we're on the verge, if you look at a 10-year, of maybe even a breakout of an ascending triangle, the 10-year yield. Yeah, like on the daily, see that if we start breaking through this 198 level, it almost looks like it, yeah, for sure we'll get that moving average. But if you just measure it like a triangle, call it 190 or 195 for resistance that we're right at, with a low 145, it's like half a percentage point.
Yeah, one of the other
Big
things.
240.
Here's the other thing that I have to continue to look at is look at gold.
Yeah, that you're trying.
Gold and silver, they're trying to go higher, and I mean, silver's attempting to break out here. Gold is attempting to break out. They've come off a little bit this morning with the dollar strength that has come through, but yeah,
Looks good.
yeah, I mean, they look good. So it's hard to sit here and get too terribly bullish the dollar when you have precious metals that are looking strong. I mean, this is this. I'm watching gold above obviously 1490. That's like a big deal for me.
If you look at the miners, they've already taken out that high, which is constructive when the miners are stronger than the underlying commodity.
Yeah.
Well, so they led.
So the risk is that these precious metals start to move, and that would be opposite of what the dollar is doing. But one of the big mover today is actually the cable, and the cable, when we slice through the 130 level, we were pushing it over the weekend, and now we're pushing this is the previous, this would be the flag resistance. This is the previous flag resistance. Actually, I grabbed the wrong line here. So when we broke out and did the flag pattern, now we're retesting that previous trend line. So it'll be interesting to see if the cable can hold these levels right here. So there you go. So anyway, so FX Cole asks if I was long the cable, Actually, no. The cable was an active trade, and when it came back through 130, just let it get stopped out. So as you can see, we got some open patterns in play here. So, but anyway, so the cable, it stalled in a 38% retracement, pushed through, and then this is where we're at right now. So it's I try not to get too terribly excited about um the end of year moves. You've got the Aussie that actually looks relatively strong, which the Aussie dollar could continue to push higher, with risk appetite as strong as it is. The Aussie could continue to move here. You have the Kiwi is actually strong, and the Kiwi still has this inverted head and shoulder pattern that it's looking to complete. And the dollar Canadian is still, it's actually range bound. We do have the retail sales today, and this will be pretty much the last piece of data for Canada ahead of Christmas. And this is going to be the one that I think you got to watch here, because the Canadian continues to hold this longer term trend line.
Blake, it's GDP, isn't it? GDP, I think today.
Oh, is it GDP? I'm sorry. Yeah. Retail sales was on Friday. Sales is on Friday. That's right. So it's GDP number today. The U.S. dollar, Mexican peso continue to, it looks like it wants to break down, but at the same time, it's not falling, which is actually quite surprising. And good morning, Stelios. How you doing?
I'm very well. Good morning, everybody.
Good morning. So, we got a really big move in the cable today. Amanda's been pretty bearish in the chat room. She's been selling the cable ever since it was in the 130s, like 133 level, following the UK election. So, and I know she's looking for a 28 handle today. So she's looking to cover it up down here. So, but that's been the big mover. And just as the cable took out a lot of the shorts on the way up, it is taking out all the longs. And I tried to play it on the long side, but I also played it on the long side 2 weeks ago too. So, yeah,
it's exactly what I wrote on the chat room an hour ago, that sterling in general just keeps taking shorts, longs out every direction. It's
crazy. And it was a really great. I played it on the long side as it broke through the 130 level. And as it came back through towards 130, tried to play it on the long side down here, but it's the end of year momentum, and you just don't want to get caught, with too wide of stops. And as I mentioned, in the last couple of weeks, you want to just be taking small positions, especially if you're going to try to trade counter trends. So, right now it's like a lot of people that were probably late buyers in the high 130s, like let's say like 133, 134 level. Those are the stops that are really getting triggered right now, is the ones below, 130. They were trying to, thinking that the cable's going back to 140. So
yeah, and we have to remember that after the elections, sterling appreciated because of the result, the Tory majority, but going from a state where a no-deal Brexit was practically zero chance, now it's back on the table, and that's what the market's doing now. There were some comments this morning from Ireland regarding trade, and they weren't very positive about what's going to happen after Brexit. So, the pound is a little bit shaky at the moment, and I tend not to trust the moves of the last 10 days of the year. These things happen in thin volume, and they can reverse. Like you very correctly said, I think we have to wait for January 2nd, 3rd, see what the market's doing, and then we decide.
Yeah, and a lot of people think that, just at the beginning of the year, you're going to start to see liquidity come back, and it actually takes a week or two, because what happens is you get, everybody comes back in the office after the first. So in this case, it's going to be like after let's see here. It'll be after the first, but most like funds and everybody's going to be planning going into like the 6th and 7th of next year. So you're talking about liquidity really come back probably about midweek after the first week, because you're in a lot of planning sessions trying to figure out, okay, how are we going to approach the FX market going into next year. and then you'll start to see some of those positions being taken on. So, if you think that, oh, January 1st, this, liquidity is going to, come back, on the 2nd, it's not necessarily the case. It usually takes about a week before, we start to see those come in. So,
Yeah, very true. And by
yeah.
the way, thank you, Forrest Gal, for your comments, and thanks for being here. We're honored to have you all here.
Yes, absolutely. So, Stelios, what are you thinking going into the end of the year as far as what the equity markets are doing here?
Well, we said it before. I think we're gonna continue to have this slow grind, unless we have a huge catalyst of some sort, which I can't really predict. But I think we're going to see a grind. Remember, the Santa Claus rally almost always happens these days, last days of the year. So I think we slowly go a little bit higher, and then beginning of the year, that's going to be a different story. But yeah, I don't see this stopping. I mean, I don't know about you, but
Well, what's going to stand in the way of the equity markets right now?
Yeah.
Who's going to get in the way of the equity markets? The one thing that I will say is the FX market is not responding to the move in equities, and it hasn't. I mean, if you look at, like, oh, you can go, well, the Aussie yen is up today. Yeah, I understand the Aussie yen is higher today, but it's not into new highs. It's not into new trend highs. It's not, like, I mean, you look, this is like the biggest barometer to me. And this is one thing that, as a let me actually change this really quick. And thank God I'm not trading it like this, because this is the one thing that I was going to do, and I'm like, yeah, I'm just, I'm not feeling it this year. I was going to actually buy the Aussie yen going into year end, with the S&P moving higher. And, would I've gotten hurt? No, but it really isn't participating. You know what I mean? And so to me, it's very, very concerning that it's not participating with the rest of the equity market rally. And does that mean anything right now? No, because it's probably going to break higher. I mean, I'm assuming the Aussie yen is going to break higher, going into the next week. But if I was long the Aussie yen and I was watching this happen, I'd be thinking, geez, I gotta bring up my stops. I can't sit here and, risk it not moving with the S&P. You know what I mean? So I think that if anybody's long the Aussie yen, especially after this, China US phase 1 trade deal, you're probably scratching your head because you're not as profitable as you would think you would be. You know what I mean? So anyway, so that's kind of what I'm thinking in FX, is because the FX market is just very unresponsive to anything that's happening, in the equity markets. And the equity markets is definitely on its own, it's on its own program right now. And it's and there's nothing to really say about it other than, wow, like, oh my God. And because you would think, you look at the dollar yen should be well above 110 right now, and it's not. And yields, look at yields right now. Actually, as we're speaking, the bonds are actually rallying right now, and I don't understand the reason why. Other than maybe there's end of year liquidity issues, and that's it. So yeah,
I tell you what, Blake, I'll be happy when this year is over. It's been easily the worst year for FX that I remember.
It has been for
shocking.
me too. And I started trading I bridged the gap between equity markets and FX in 2002. And so this has been, the worst as far as liquidity or volatility goes. And one of the charts, these are the charts that I continue to look at that kind of keep me sidelined for the most part, is if you just look at, here's the US dollar, Japanese yen, implied volatility. This is a crazy chart here. you know, I know I keep pulling it up, but it's,
Dear Lord, yeah, exactly.
you know, this is the dollar yen implied volatility. We don't, as FX traders, we don't want this. We do not want volatility dipping. We want volatility up above 10, closer to 15. That gives us opportunities as traders. Same thing with the euro dollar. You know, euro dollar implied volatility is at historic lows. I mean, you know, here, same thing. This is you know, let's go to I mean, you're looking at since 99. I mean, back again when I started trading the FX market, you're thinking about right here. You know, that's where volatility was, and it was easier to make money because the market wasn't one-sided. It wasn't grinding. It was you know, if you got in a trade and you found yourself a little you know, you mistimed a position in the market, there was back and forth movement which would allow you to, you know, massage your way in and out of a trade. And it's much easier to do when there is volatility.
There were trends.
Yeah, there were trends. You know, right now, I mean, when you've got the last 2 years of the euro dollar being in 200 pip moves, you know, 200 pip moves over the course of like 6 months. I mean, how are you? You know, it's hard to make money when you're seeing this little volatility. But I do believe that the euro dollar is going to explode in volatility this next year. So, you know, whether it drops down to one, you know, back to parity, or it goes back to 120, or, you know, 115, 120, it's going to move this year. I believe this year is going to be the year that we're going to start to see some volatility. So you just got to be a little patient. And, you know, like I said, when you're trading, just take small positions. You know, you get stopped out, you know, you make some money, pull the profits off the table. And that's, I think, the way you've got to really approach the FX market, you know, these days. You know, take what you can when you can, you know. So let's take a look at the Canadian, because we do have, is Canadian GDP, right? Sorry, I wasn't even.
Yes, sir.
Yes.
I'm not even really paying attention today. So yeah, we have Canadian GDP coming out, and we have durable goods orders at the same time, actually. So GDP, we're expected flat. So how exciting when we have GDP's low almost universally around the globe, and then on top of that, you have rates that are basically zero across the globe. You're not going to get a lot of movement in currencies. You know, the thing that moves currencies the most is going to be interest rates and divergence between interest rate expectations. But if everybody's at zero, then, you know, it's hard to get the currency market to actually, you know, move somewhere. And the flip side of that is, you know, when you have growth low and slow around the globe, there's not going to be a lot of change in interest rate differentials for that reason either. So, yeah. I think the central banks have done a pretty good job at containing everything, wouldn't you say?
Containing, yeah, that's an interesting word. Yeah, they're trying to eliminate recessions, aren't they?
They're trying to, yeah, they really
are.
Right?
I'll tell you what, though, they did well after the crisis. I mean, 2008, it was potentially explosive. So they did well to avoid a kind of a financial meltdown there. But
we'd be coming out of it now still.
We should be coming out of it 2-3 years later, right? So we've kept going.
If they would have let it happen, we'd be coming out of it now.
You will allow me to disagree here.
You don't think we'd be coming out?
Oh, I think we would be coming out like 2-3 years later.
Yeah.
But if they let the economy rebalance in the proper way, we would be coming out much later, but having a much healthier economies.
You know, maybe Blake knows this. Blake, I'm seeing a tweet. The Yankees are coming. U.S. firms rush to Euro debt markets. Now, you know, they rush to U.S. debt markets, corporate debts up there. Why made they?
Sorry to interrupt.
The numbers are out. The dollar Canadian's actually moving higher. We got Canadian GDP that came in
minus
0.
Yeah, -1. So a little weaker than expected.
Yeah, durable
goods.
Worse, yeah.
What's that?
Also a bit
good.
worse, and revisions also a little bit worse. So overall,
Yeah, durable goods they're weak here. So
Steve
yeah.
said buy the pullback after Friday. Good call, Volgi.
Sorry, say again, coach.
You said buy the pullback in Canada after the breakout on Friday. Good call.
Yeah, it pulled back to 50. I thought it was going to pull back to 50, and good
Yeah,
call.
40.
Pull back to
It
the
went right to
40s
the
and
wedge
then
line.
rallied up there. Yeah, so
Yeah, nice.
Yeah, as a short-term trade, it made sense because we were testing an interesting area. So yeah, it did make sense. I mean, yeah. So I said 40 to 50, 131, 40 to 130, 150 should be a good short-term trade for those that are short-term traders. So far, it seems to be.
Yeah.
And you notice that the weak durable goods orders had done nothing for equity. Equities continue to plow higher.
Of course, equities don't care about any of the real hard data until they start caring. Of course,
Until they do.
Yeah.
No, and but I got to point out that precious metals continue to be strong here. So at least the precious metals are reflecting the weaker economic data that you're seeing, and that's something to just keep in mind, that even though the rest of the market is ignoring it, precious metals aren't. Stelios, you've been a long-term precious metals bull.
Yes.
Right. And what makes you continue to stay bullish these precious metals going into next year?
Logic.
No, I've said it.
What'd you say, Steve? Logic?
Common sense.
No, I've said it before. I think I wrote a blog post about it as well a few months ago. You have all these factors that affect precious metals in the short term. You have the dollar strengthening, you have yields rising, equities rising. They can all bring precious metals lower. But it's in the short term. In the medium term, if you have a horizon of a few years, let's say. In my opinion, the only thing that really affects metals is the rate of change of money and credit supply. And as long as this is going through the roof every year, $1 trillion in the US, right? Every year, and something which is denominated in dollars, and its supply is not changing drastically, actually it's not changing at all, then, or the supply and demand is not changing, then I see no other direction other than higher. Of course, it's not going to go in a straight line, but I think in the medium term, there's no other way to go.
There, and I have precious metals exposure right now. I'm long, some PMs, and I continue to build those positions because technically they're just not pulling back. And as you explain, money supply continues to expand, right?
Yeah, exactly. Just think about what, I always say this, think about what $100 could buy you in the supermarket, now and 10 years ago and 20 years ago. It just, it's the purchasing power of the dollar, of the euro, pound, whatever you want. It just keeps dropping every year. And that's, that's just plain simple mathematics. It's not something I'm coming up with myself. It's just pure maths.
For example, not coincidentally, if we count from 1913 when the Fed was created, the dollar has lost 98% of its purchasing value.
Yeah,
of course, gold and anything that is tangible had to compensate for that. So, it's the best store of value you can get. End of story. Because as long as gold, and it will forever have the intrinsic properties that it has, because it's not something nice and shiny. It's something that humanity has used for various purposes and will continue to use for various purposes, probably, to eternity. It will have to at least adjust in the long term to the real value of money. And, we unfortunately, since 1970s, all currencies are fiat currencies. And, we know that for the obvious reasons, debts are going higher, etc. Governments will keep devaluating those because it's the easiest politically, it's the easiest way to escape the inevitable trouble of having exploding debts.
Yeah, I actually say the same, not only about metals. I say the same about land, about equities
Yeah,
as well.
anything tangible, anything
Yeah,
tangible.
even companies like Apple or Amazon or whatever, they are tangible, they're real companies, they have assets. All these are linked to inflation, right? They have real estate, they have everything that they have. I think that's one of the reasons why the equity indices are just going to keep going higher and higher. Obviously, if you bet on specific companies, you run the risk of that company, but overall, I think it's going to be the same. Any real asset, more or less, is going to be going up to infinity. I know it's a crazy thing to say, or it might sound crazy, but it's just my view, and
I'm buying another refrigerator for my portfolio.
Yeah. Yeah.
Anyway,
yeah.
but I want to wish everybody happy holidays, Merry Christmas if you celebrate it. Thanks everybody for being here all the time. Don't read too far into these moves this time of year. Next year, I'm very optimistic for volatility to come back this next year. I really think that now that we're past a lot of these big events, we're going to start to see volatility come back to the FX market. So this is the time that you just want to you want to stick around and tread lightly, try not to be too aggressive, and let's go into next year with some explosive moves. And I want to say Merry Christmas to everybody, and I'm going to turn it over to you guys. I actually have to go buy a couple last minute gifts because there are some that have apparently fallen through the crack today. So
it is always darker just before dawn, Blake. So I think that's the case here as well with
absolutely
the market environment.
100%. So Steve, Stelios, Coach, everybody listening in, Merry Christmas to you guys.
Merry Christmas.
You, Merry Christmas. Thank you.
All right.
Great stuff. Okay. Yeah, I don't have much more to say, actually. It's been very, very quiet this morning, and really the pound's the only thing that's been moving. Pound and
Indeed.
metals.
Anything that's pound related, we're going to have a look at those, yes.
Yeah.
And yes, as you said, the metals as well. I mean, we keep seeing this relentless slow grind higher in the indices, which I'm 100% positive that it's going to be reversed in the short term. I mean, right? So I do believe that this grind higher might continue for this week that has very few trading hours actually in it. But I do think that at least the pullback when we see the new start begin, we're going to get, because the markets are now moving purely on extremely low liquidity and in essence sentiment. I mean, we've completely decoupled from reality, and of course that's been the case for a long time, but I mean even in the very, very short term, everything is extremely overbought. So I do believe that we're bound to get a pullback towards at least, I would say, 3150, 3160, that previous resistance that we had in the end of November. So I do think, and I'm actually considering, I'm still short the USD NOK and Euro NOK, and they're performing quite well. So I'm thinking of taking some profits there probably today, because I'm not going to be much in the markets for the rest of the days until Friday. But I've started contemplating of actually shorting like half of a position S&P here, and perhaps on Friday shorting a little bit more if it's higher, because I do think that, as I said, in the short term we should see at least some retracement before moving higher. As you see, and usually this is a good sign for me that the market is about to reverse in the short term, when you start drawing one bullish formation after the next. So we had like this ascending wedge, we broke above it, then we had this ascending wedge which is steeper, then we broke above it, now we have this very steep ascending channel. We're also reaching, as I've told you, I've been monitoring this pitchfork here for years. I have it on my chart, and every single time we reach the 100% extension, not every single time, but almost always when we reach the 100% extension, you see some very decent pullback, and the only 2 times that we've reached a 200% extension. One of them was that mania phase in January of 2018. We actually overshot it by very little, and this is the second one. We're about to touch that area as we speak. So, you know, even as a mean reversion in a bull market, so I'm not talking about like, you know, a bear market starting from here or whatever, but even as a mean reversion in a bull market, I mean, they're going to mark everything to market, you know, to end the year, and everybody's going to be happy and pleased, but they will have to do some position squaring. So I do believe that some mean reversion, you know, can at the very least bring us back to 3150, if not even lower than that. I mean, this is a very conservative approach, because I think that 3070 also is an interesting zone. I mean, I would consider that here, there. I would consider that very, very doable as well. So I do believe that you know, people are getting out of whatever they have left of short positions, those that were short. But I think that actually this is the best point in time as a short-term trade. I mean, by short-term, I mean with my time horizon, which is like short-term for me is a few days, right? Because for other people might be like 2 minutes, but you know, for me is a few days. So for a few days trade, I want to be short indices here. The VIX, as you see, is still diverging. I mean, even if you look at it the short term, just look at the end of November, for example, right? The VIX was down at 11.4, and you know, the VIX is currently at 12.5. And if you see, end of November, we were here, right? There at 31, like 60. We're now decently higher in the VIX, and we are like 70 handles higher. So even if you want to look at short-term divergences in the VIX, it also looks good. So anyhow, I'm not advocating that, you know, you should go and be short the indices, but I'm happy to see them show overbought in the short term, because I now want to be short the indices here for a few days until the first days of the year. Okay, I'm going to start, as I said, with half a position, and you know, I'm going to be more than happy to sell another half, like at 32, 50, 60, depends. I mean, if we find ourselves higher within, you know, by the end of the week, you know, fine, even better. I'm absolutely fine with that. I'm pretty sure that I will be able to close that, you know, in profit within a few days, because I simply don't believe that the market in the short term can become even more parabolic than it currently is. So I don't believe that this is a possible outcome, like doing that, a complete vertical. I mean, we've already been doing this. You can see it here. This is the epitome of what we call a parabolic move. I mean, the rate of appreciation has, you know, accelerated, and we've literally almost gone to the vertical part of it. So, you know, whenever I see that, you know, I feel very comfortable, you know, trading it the other way. And, you know, I know that a lot of people are quitting right here, right now, but, you know, I'm just about to begin. So that's it about the indices. I have nothing else to add. As I said, everything is, you know, very, very overbought, and it might continue to be so for this week. But I think that with the new year and liquidity coming back in the market, we should see some pullback. Now, there are two moves that have been very interesting to me. I'm going to start from Palladium, because if you remember, it was actually Friday when I said about Palladium that be careful, because we can have a situation of, you know, going up with the escalator, going down with the elevator, and within a few days we can find ourselves down at 1815. So as it seems, I was wrong, because what I mean, when we were doing that, when I was saying that in the webinar, we were trading at 1935. I remember it like now. So I thought, like, you know, now that we've broken up below this channel, and it's the same exact situation as the one I was explaining with the S&P, and that's exactly what I expect to happen with the S&P as well. I mean, look at the last phase of the S&P. It's exactly a channel as the one we had now. And mistakenly on Friday, I said that now that we've broken below this channel, within a few days, we can find ourselves easily trading at 18.15, at 18.20. I was wrong because it took actually half a day. So yeah, I was wrong in timing. I thought it might take us 2-3 days. It took us half. So I think the same thing is going to happen with the S&P. We're going to see a sharp leg lower. Doesn't mean that we're going to break the bullish trend, right? As we haven't done so in Palladium. I mean, we had like a huge move lower. We hit that target I had in mind like within half a day. Is Palladium bearish? No, it isn't, right? It isn't. I mean, look at this. This remains a bullish trend, right? But in the short term, that had become extremely unsustainable. So, a lot of people have been long this market. And guess what? Let's assume you're long this market. I mean, sometimes technical analysis, especially when you see conditions that are extreme, is very easy. Imagine that you're long Palladium, right? Because you bought it, for example, when it broke through the cup and handle formation because, you were long for macro reasons because, we had like limited supply and, a lot of demand or whatever else. And, you've seen like a windfall of profits come to you. And then you're monitoring like this ascending channel, which is like very steep. And then you start hitting every single target you have. I mean, we hit the cup and handle formation, we exceeded it, we hit like the 200% extension of this last pullback and everything else. And then you break through this channel. I mean, the first thing you're going to think is like, okay, I mean, it's the end of the year. Why should I push my luck? I mean, this is a nice place for me to take some profits. And I'm pretty sure that I'm going to find a better place to buy Palladium next year, and guess what? Yes, I mean, a lot of people thought like that. And yeah, they were absolutely right. So nice two-day reaction from the same areas. You see, technical analysis does matter. I mean, it's not a coincidence that on Friday we stopped exactly in this area. It's not a coincidence that we tested it again today and it has held. Now, does this mean that we're going to head to new highs exactly from here? No, it doesn't. As it didn't mean, I kept saying that cable, might produce an opportunity to buy it at 130, but it all depends in the manner you do that, right? So 130 was enough to stall cable. It wasn't enough to stop it, right? So, you have areas of support. It doesn't mean that every single area of support is going to create, a reaction or anyhow a big reaction because, for example, 130 did hold the market for 2 days, but now we're breaking lower. So now I'm focusing on the next area of support, which is like almost, it's actually a little bit below 128, right? I don't think we have any real support until 128. So Blake mentioned that Amanda said that she's looking for 128. I would have to agree. Now that we are below 130, yeah, 128 makes sense. Is the next area to look for. So same thing with Palladium. I mean, we plunged to the first area of support. It proved that it is indeed an area of support. Does this mean that the correction in Palladium is over? No, it doesn't. It doesn't, because especially seeing at how sharply we got that move happening. I think it's a real probability that we can see Palladium move to the next area of support or to the next after that, or even down to retest the broken neckline of this cup and handle formation eventually at 1610. I mean, nothing moves in one direction forever without seeing pullbacks. So that was a very sharp pullback, and the chances are that it might have to be longer in time or deeper in price. So longer in time would mean something like this, right? Get people bored before it can actually continue. Deeper in price would mean something like this, for example. So, it depends. The market can do either of the two or a combination, right? Because the market needs to correct at some point. Any kind of move needs to correct either in price, in time, or usually a combination of the two. More in price, less in time, more in time, less in price, some of both, depends. And you have to judge Unfortunately, and I've said that multiple times, corrective moves are the hardest ones to assess, because you see a corrective move starting and you can say, okay, this is a corrective move starting, but it is very, very hard until you get a lot of price action to say in advance what type of a corrective move you're expecting to see. So for me, it's much easier buying a breakout in a move that's clearly impulsive than or playing a reversal with a very good risk reward ratio, for the start of a corrective move. But playing out how a corrective move is going to unfold is, in my opinion, probably the toughest type of trading. You can only assume. Anyhow, enough time spent on Palladium. Why is USD yen not higher then? First of all, as Blake showed, FX is not really following what the rest of the things are doing, right? Especially USD yen has been trapped in a range for 2 months, right? November, December, 2.5 months actually, for a full 2.5 months. It has been trapped in a very small range, let's say 108 to 109.70. So 170 pips. We've been there for 2.5 months, and it is very likely that we can go through the holidays, remaining here and until liquidity comes back. So we might actually complete like 3 months being stuck in a range of 170 pips. So why should you be looking to do something with the USD yen? I mean, I'm not looking to do something with the USD yen. If you're looking to do something with the USD yen, wait for a breakout from this zone, and then especially if it's during a period that liquidity is going to have started coming back. For example, let's say if it's after the first few days of the year, then that might actually prove to be a reliable breakout. So if it breaks above like 109.70, then yeah, we might see an extension to the upside. If it breaks below 108, then we might see an extension to the downside. Anything in between is noise. Of course, I wouldn't blame you if you want to short it here, just because we are, very, very close to the resistance of this zone, and say that, okay, I'm gonna, I have very, very limited risk. I'm gonna risk like, I don't know, 50, 60 pips, and look for a move towards, let's say, this first area of support at 108.40, or even back to 108. I mean, that makes sense as well. But personally, do I want to do something with it? I mean, I'd rather watch paint dry or grass grow than being used again at the moment. Blake, why can't it turn back here to 32.01 and then rip up for one more high? I'm assuming you're talking about the S&P. I think that it will do that, but it is more likely than anything to do that, as I mentioned before, next week, after the new year. Okay. This is called the Santa Claus week, that it's going to be starting, in a couple of days. And usually, stocks are very positive, or they grind slowly higher. Very rarely you're going to see like a considerable pullback during the Santa Claus week. So probably that's going to happen. I expect that's going to happen, Raz, but I expect it, as I said, to happen probably in like 10 days from now, like 10, 15 days from now. Anyhow, to be on the safe side, as I said, I'm going to be shorting like half of a position today. And, if it keeps grinding higher during the few trading sessions that we have ahead until the new year, I'm going to, gladly short another half of a position higher, wherever higher we will have drifted to. Let me see. Dale, your view on S&P, please. Can we get a pullback this week? Okay, I answered that. Now, Dale, if you want to intervene here as well, be my guest. Let me see.
Pay attention Thursday during the eclipse.
Okay.
Don't laugh.
Okay. Okay, coach.
I've seen a lot of inflection points on these things.
I'm
I know.
not monitoring them, so I have no opinion.
Oh, okay. But it's funny.
I have no opinion. Really,
well, you laugh. That's an opinion.
Yeah, I mean,
It's
let's
ridiculous to you. Admit it.
let's say it like that. I'm very,
right.
very skeptical.
Okay, there you go.
Okay,
right.
I'm very, very skeptical.
Okay.
But to be fair, because I'm a person of science, I haven't done any studies, so I can't eliminate the possibility. Because for me to eliminate the possibility, I would have to actually,
Yeah.
go back in time, put down the numbers. I mean, seeing eclipses and see if they actually
Yeah.
more
You
frequently.
may end up laughing all the way to the bank.
No, as I said, I
All
always
right, anyway.
I always like to keep an open mind. I mean,
I'm calling you Thursday, even though we're closed.
For example, I'm an what's it's a Greek word, but how do you say it in English? I'm an agnosticist. How do you say it?
I don't know. I'm not. You want it in Yiddish?
No, whatever. Anyhow,
It's a Meshuggah world. How about that? So,
agnostic. Yeah, agnosticist is the Greek word.
you're
Yeah,
agnostic.
that's
Yes.
yeah, I'm agnostic. Yes, yes.
You know that my psychiatrist, I have a new therapist now, Steve, actually diagnosed me. I do, honestly, but the diagnosis was very interesting that I'm
Tell me.
a dyslexic, agnostic, insomniac. Can you believe that? What I have to deal with? That type of mental illness? Do you know why
Why?
she diagnosed me that way? Because I stay up all night long wondering if there is really a dog.
That's very good joke. You've said it before. It's a
I
very
know,
good one.
yeah. Anyway,
Yeah. So yeah.
I sure hope there's a dog because I like them more than people.
For example, I'm agnostic. Do I dismiss the possibility that there is a God? No, I don't dismiss it because I have no evidence, right? So same thing with eclipse. I mean, I'm very skeptical about it, but it's not that I can rule it out as a possibility. You know what I mean?
Oh yeah, and happy solstice to everybody too.
Okay,
we went through the shorter. That's a big thing too, Steve. W.D. Gann.
I'll take your word for it.
No, W.D. Gann's word. He said, "Watch for change of seasons, for change of market direction."
Oh, that I agree with.
Okay,
actually,
well,
seasonality. It's what we talked
the
about.
solstice was yesterday.
Okay. So yeah, as you know very well, we more frequently than statistics would assume, we tend to see important turns in the market at the very last or at the very first few days of a year. So you have to keep that in mind as well. Having said that, the Aussie is retesting 69.30, and I've mentioned multiple times that 69.30 is definitely
great
and pivot in this market, right? So don't be so.
The commodity currencies have gone from looking the worst to looking the best.
I wouldn't say they're looking I wouldn't say they're looking the best yet, but I will have to say that they have started building some formations that can prove to be accumulation, right?
Okay, yeah.
We need more evidence to establish that. But for example, there's
that's what the Democrats are saying about the trial in the Senate.
Which of the two Democrats?
Huh?
The socialist Democrats or the ones that used to call themselves Republicans?
Abraham Lincoln's party.
Okay.
No,
because
the Democrat.
Nowadays, as an outsider, I mean, besides secondary issues like abortion and gun ownership and things like that, at least having to do with economic policy, because I'm looking at things from a lens of an economist.
Right.
I can't distinguish the two parties. I mean, you can't distinguish who is more fiscally responsible, the Democrats or the Republicans. I see no difference between them.
They just give it away to different people.
Yeah, it's the same type of madness. So I'm really
just different recipients.
Yeah, something like that.
Favors.
Something like that. But one thing remains the same: is that the government keeps spending like there's no tomorrow. Deficits
there isn't.
Yeah, probably. Yeah.
After the eclipse.
Yeah, deficits keeps exploding higher. And this is definitely an unsustainable situation. I mean, of course, you never know when it's going to go boom, but you know that the trajectory is already one that is bound to bring us to the point that it's going to go boom. So 69.30 in the Aussie. Don't be short if we close above it. I think there can be a major squeeze coming here. So
How about crude, Steve, before you go? Did you cover it?
no, I didn't. So let's
Okay,
go ahead.
because it went right to my throwover line on Friday and held. But I'm
Look at
thinking
this.
that maybe crude, if it breaks back under 60,
Yeah, I
would
have
seal a top.
nothing to say about crude that the chart hasn't said it already. Look at this.
Yeah,
Right.
Okay.
It perfectly.
yeah. So you have a different line. It's a better line.
Yeah,
Mine was like a throwover.
Yeah, it was intraday a throwover. If you see here, there it is.
Yeah,
You see
I
it.
see that.
This is a daily chart.
Yeah.
So intraday a little throwover.
Oh, yeah.
And a little throwover from this ascending
That's
channel.
right. Yeah.
But definitely it's holding. So, from a risk reward perspective, it still remains an attractive short opportunity in my opinion.
So when you think about the whole year, okay, S&P's worst December since 1929.
1929. That is
Okay, crude went down, but they both bottomed in January. And look at all the successive new highs that we've had in the S&Ps, whereas this was only a recovery in crude. So to me, what you're getting is a secondary top in crude developing for the first correction in the S&Ps. But when you think about it, the underperformance of probably one of the most important ingredients for economies to run, energy, only recovered, I don't know, what, halfway, 61.8, while the S&Ps have blown out the highs from 2018.
Yeah, they have blown out the highs, and not only that, just think about it. Crude is in essence in a large because if we want to expand this triangle back here, for example, right?
Yeah.
You can do this.
Yeah.
We've been in this contracting range in crude since the middle of January, right?
Yeah.
So this is like a huge consolidation. While, as you very well said, not only that, just think about it. Last year we had like a healthy correction in a very overblown market, and since like this day last year, the S&P, which is like, think about it, we're in the 11th year of this recovery. It has moved higher almost 40%. 40%. Let's contemplate that. During that time, profitability of the companies has not actually increased. So this move has been multiple expansion, like almost all of it, if not all.
That's a very good point. Multiple expansion. And how about this? If crude can't perform in one of the most prolific risk-on environments I've ever seen in my career, what happens if the S&Ps lose a bid and we get a 10% correction? So the only thing that's holding it up, I think, is risk sentiment. So if risk sentiment turns sour, the weak will get weaker while the strength corrects.
Yeah,
that's my theory.
That is usually how it works. That is usually how it works. And this is also one of the reasons why, since both of my positions that I currently have are also correlated somewhat to crude, right? And as you see, USD NOK now has reached the first soft area of support. That's why I'm going to be taking. I'm like something like 1.3, 1.4% in the money in this one. I'm going to be taking half of my profits here, and in the Euro NOK, which is which is less likely that it's gonna be affected than the USD NOK. But where is it? There it is. So Euro NOK, I'm more like 1.7%, I think, in the money here. I'm going to be taking some profits here. Although especially for Euro NOK, I don't know, I feel very good about it.
That was a nice trade, yeah.
I think actually, Coach, Euro NOK has the potential
to break down out of that wedge.
Yeah. And if it does break down below that wedge, there's going to be a lot more downside coming. A lot of it. Just look
Would
at
that
this.
imply a decline in oil prices?
Theoretically speaking, no. Quite the
No?
opposite. I
Okay.
mean,
Huh, interesting.
strengthening crude should help
Oh.
should help it. But don't forget that it's
I
also
didn't
all
know you were
about
here, Peter.
it's also all about monetary policy. For example, we've seen the Swedish central bank
Oh, our
move
guest
away.
is here.
Okay.
I didn't see him because I put up the wrong name. Okay, Peter.
Okay.
I see you now.
I
Okay.
wish everybody, so coach, when's the next day? We're going to be here on Friday.
I close all week, maybe next Monday. I'm not sure because it's New Year's next week too. So
let me see.
anyway, why don't you let me know while I introduce Peter?
Okay. Okay, we might be here actually on the 27th, Friday.
What's that?
Okay,
This
we'll see.
Friday? Okay.
Yes. Okay.
All right.
Yeah. So we'll see
Peter's-
you back on Friday.
All right, buddy. Merry Christmas to you and
enjoy,
your family.
Merry Christmas. Enjoy the holidays, everybody, and enjoy the interview.
Okay, Peter. Thank you for your patience. I'm unmuting you right now. How are you, Peter? It's a pleasure to meet you. You'll have to turn on your mic. It's a drop-down menu on top because you are unmuted.
Make sure to, next to the mute button, there is an arrow that has all the audio settings. So make sure you've selected the proper microphone, output source, and everything else.
And then you have to stop sharing, Steve, for him to share.
Yeah, let's first hear his voice.
Yeah. There's a toggle at the bottom next. Okay, there we go.
I stopped sharing, but yeah, let's first hear his voice. There is a toggle next to, there is like a drop down menu. It has many buttons. The left button is mute and mute. Next to it, there is a little arrow. If you click on it, it has all the audio settings.
The shadow knows. Next to the mute button. I think I hear Peter now. Hi, Peter. I hear a mic.
Probably that was me.
Oh.
He says he's speaking. No, we can't hear you. Have you selected the correct microphone? Yeah, but have you checked that the correct microphone is actually selected from the little arrow next to the mute button?
Okay, how about now?
There you go.
Okay.
That is it. Yeah, now we can hear you.
Sounds good. Okay.
All right,
and
thank
what
you.
about screen?
Now there is a green button that says share. And
Screen, got it.
Yeah, perfect. Okay,
Yep.
enjoy the interview. Bye-bye.
All right,
Thank you very much, Steve. Merry Christmas. Peter, nice to meet you.
Nice to meet you, Dale.
It's really a pleasure. You know, I've seen you on Twitter for quite some time. I appreciate you taking the day before the holiday, unless you would probably prefer to be here instead of in a mall.
Right yes, now. That is true.
Okay, so I did a little bit of reading your background, and you have one of the most widely followed morning profile pre-market setup for your subscribers, and people have been following you for a while doing this, and now I see what you have for profile. I'm also interested in, Peter, how first of all, the Twitter handle Shadow Trader. Why Shadow Trader? What are you shadowing here?
Just shadowing the actions of real traders. You know, it's not anything like Black Hat or anything like that. It's just it just simply means to follow somebody.
Okay.
And to be able to follow their movements exactly. So, you know, we run a number of advisories on our site, all of which we trade very transparently, many of which through real-time text message, you know, so you just you can shadow and follow along. That's all.
So why don't you get in a time machine and tell us how it all happened for you, a little bit of your history that led to Shadow Trader?
Yeah, basically started following the markets when the internet bubble was expanding, kind of towards the end of it, I would say
Okay.
like 98, 99.
Yeah.
And then got into trading the markets actively at the right at the turn of at 2000, and went through the usual few years of struggling to profitability, and started turning the corner around '05, and I think we started Shadow Trader in '06, and we've been motoring along ever since then.
Okay, so between the end of the dot-com bubble in 2005, did you have any major influences, Peter, that kind of helped you create a new paradigm for yourself from struggling to becoming more effective and more consistent? Did you have any mentors?
I did not actually. I can't really say that I had direct mentors. I think I was schooled in the School of Hard Knocks, but
Oh, I know that.
uh,
I went to that university.
yeah, that university, yeah, it's
Yeah,
expensive.
yeah.
Um,
Ivy League. I paid an Ivy League tuition. How
right,
about you?
exactly. But
I hope people only pay community college tuitions, but
exactly. But the
yeah.
important thing is that during that sort of learning period, and I highly recommend this for anyone. The most important thing is to take copious notes and just go back and pore over charts over and over, and plot where you were active and where you weren't active and why. And the bottom line is that all of the education will come from all of those places in the chart where you were active, where you made a mistake, not where things went okay and you made money. The learning all comes from, why did I do that or why didn't I do that, which led to losses, and that's really it. And my
So
particular evolution took a huge jump when I made the basic realization that 85 or 90% of stocks statistically follow the market. So that was the genesis of the Shadow Trader methodology that I developed, which is to follow market internals, namely the breadth, the advanced decline line, and the tick. Initially, it was the trend. The trend has kind of fallen out of favor because of all of the inverse ETFs have kind of thrown it off. But initially, it was those three. I've now switched to the tick. I've also added cumulative tick since then. And that essentially was where the corner was turned, proverbially, because once you start to understand very clearly how market internals drive the market and tell you if the market is giving a real signal or a false signal, you have a much better chance of being in the right direction. And then some years later, I would say it's been at least 7 or 8 years now, I discovered the work of James Dalton in the market profile. I visited him a couple times. He became my mentor in the profile. And since then, I've added market profile to my analysis, and that has opened the doors, even wider, I think, because I'm a huge believer that it's an extremely important thing in terms
yeah.
of understanding market structure, market direction.
I never understood it, but a lot of floor traders and guys I knew from the floor watched market profiles.
Mhm.
And you are now, I understand, a proponent of journaling. You have all your people that are learning from you journal because of, I'm a big believer in NLP. You have to write things down to really get it. I don't know how old you are, Peter, but I used to update my charts by hand. You can
Mhm.
never do a chart like this by hand, I don't think.
No,
So
probably not. It'll take too
yeah,
long.
yeah. So tell us about what you learned. We're looking at a market profile right here. I see letters and numbers, and maybe you could walk us through it that kind of tell us what kind of market messages you get from this.
Certainly, certainly. So what we're looking at here, I'll just for instance expand Friday to give you an idea. This is a market profile chart, and the way that the market profile chart differs from regular two-dimensional charts is that it adds the third element of time into the mix, and that's why you can see that the market profile chart is a lot wider than a typical candlestick, which is just has height basically and has price and volume on the bottom. The market profile chart, what it does is it marks off prices it breaks the day up into 30-minute periods. And every time a price trades during any 30-minute period, it marks that price level with a letter. And you can see in the profile on the left, the one with the yellow box, we have capital letters. The one on the right are lowercase letters. That's an overnight profile. That's essentially the distribution of prices from Sunday night and into this morning. But the main one to deal with is the regular trading hours profile. And like I was saying, you mark each 30-minute period with a letter. And when that 30-minute period ends, you move to the next letter. And as you can see, that creates this sort of bell curve distribution of where price is traded over the course of the day. And
Do the letters mean anything, Peter? Different letters?
No. Each individual letter doesn't signify anything. You can start with any letter you like. I prefer to start the profiles with the letter B. Some people start with A. It doesn't really matter. The letter, all the letter means is that the first letter is always going to be your 9:30 to 10 a.m. period. So you can see here that the lowest letter in the alphabet is obviously B. So B is 9:30 to 10. C is 10 to 10:30, and onward. Until you get to 4:15. And what the profile is essentially doing is, one of the things that James Dalton taught me that I always go back to. I have a number of a million things from him, but one of the things that he always said was that the winner in the markets will simply organize information better than the next person. And that really stuck with me, because that's essentially what the market profile is. The market profile is simply a way of organizing the market. You're organizing time and price into a certain structure. And when you have it, it gives you a lot more information, because you then see where value is as opposed to just where price is. More two-dimensional charts really only show you price, but price is misleading, where value is never misleading. The market profile shows us where value is, because it shows us where the most time was spent at particular prices, and where that is obviously is where the profile is widest, because it has the most letters that had happened over multiple 30-minute periods. And that's
what I find very admirable about this, Peter, is that you were already a pro, and you already had a lot of successful methodologies working for you, and your hunger to get better, even after many years, to take on new discipline and learn from somebody else, tells me about your personality of always trying to fine tune something and believe that you're either growing or dying. And I'd like to commend you on, it's tough sometimes. I'm kind of like tough to teach an old dog new tricks kind of guy, but you went out there and actually, after a fairly decent period of time, said, what I have is good. How can it be better?
Absolutely. And I appreciate you saying that, because I continue to do that to this day. I'm not going to get into it, but I kind of discovered something about a week ago that I got really excited about, and I'm just tearing into a bunch of research on that, and I want to teach it to myself. And
you love what you do.
Oh, absolutely. It's a never ending. It's the ultimate meritocracy, and it's also it's a mirror unto ourselves. I always say that when a person is staring at a bank of screens and they see a bunch of charts, they should not think they're looking at charts. They should think they're looking into a mirror.
Oh, that's a pearl. Okay. All right, go ahead, buddy.
So anyway, so back to what I was saying about the profile is, like I said, the profile organizes information, and in organizing that information, we get a lot more, a better idea of where value resides as opposed to price, because price is often misleading, and prices will generally gravitate towards areas where value exists, and they will reject areas where there isn't value. And when you look at this structure, not only in terms of one day, like right now on the screen, we're just looking at one day, but these structures, if they're looked at collectively, also give us tons of information when we sort of zoom the chart out and look at the structures that have built up sort of the move. So for instance, one of the things that is very important that I'll just touch upon here, I've been talking about it a lot recently, is the fact that a basic tenet of these theories and this type of analysis is that any areas that have high volume or a high amount of time that was spent, those are called points of control, where the most amount of time was spent. You can see them here in the middle. They're the widest points. Those areas should be revisited. A market that's acting properly, that's rallying, should essentially sort of take the pitch, hit the pitch, and then, you know, the guy on first base, he should tag up, right? If it's a fly ball, you get what I'm saying? Like, you have to
Yeah.
tag up, meaning that the market should come back to these high volume areas and test them before rallying further. When the market doesn't do that, it leaves these high volume areas untested, and we call those VPOCs, which stands for virgin points of control. So they're those points of control that have never been tested. And one of the things that is very, very apropos and important about this market, because obviously this is a huge sort of discipline, and I can't teach the whole thing in just a few minutes, but I wanted to leave the listeners with something that they could absolutely use going forward, is the fact that this market right now has an absolute record number of virgin points of control beneath us that have not been tested. This market has been rallying like no tomorrow for so long that we now have 11 of these virgin points of control untested below us. Now, to put that into perspective, on an average run-of-the-mill rally, when this VPOC number gets to 5, that really is a wake-up call to me. There is generally a liquidation break coming that will repair all those virgin points of control, come back and test them all if that number gets over 5. That number is now 11, and I don't see that repairing.
Have you ever seen 11 before? What's
No,
the highest
absolutely.
reading?
I've never seen it, Dale. Never. I've never counted 11. There are 11 virgin points of control below us from I believe from the October low, meaning the last swing low. We have 11 of these virgin points of control.
So I have a lot in common with the market, because the market may not know what to do with 11 virgins either.
That's right.
Is that true? I certainly wouldn't. So you're really getting extremes. Is there anything in market profile that would give you a hint for possibly trading the other side of the market because of this unprecedented setup?
Sure, absolutely. And I'm glad you asked that. There's two things that I look at, which are kind of two sides of the same coin. And essentially, when a rally ends properly, we call that the end of an auction. And it may not be the end of the rally totally, right? We may just fall back and come back up, but it will be at least enough that somebody could get short, meaning that there's an end to an auction. And what the market profile does is it essentially tracks the activity of the two-way auction process in the market. So I want you to think about this just like any other auction. It could be cattle, it could be cars, it could be artwork. When you have an auction, generally, and especially a type of auction, like maybe artwork is not a good example, but let's take like livestock where there's lots of it and it's all day long and there's hundreds of lots that need to go off.
Okay.
Generally, if it's going to end the right way, the prices should go up at the end in some sort of crescendo, and there should be just a few prices trading at the top, but lots of activity, but maybe not much volume, and we call that an excess high. So you can see in these profiles here, for instance, these last few days, there's no excess high. This would be a good example of an excess here. See this? So when you see a spike like this, where only one time frame, one period, that C period in this one, has the move up and then move back down, that would be an example of a potential end to an auction. Now, the other side of the coin, which is a little bit tricky, is that it could actually be the opposite, meaning that we could end on what's called a poor high. And a poor high, I'm just trying to find one. A poor high is one that has a lack of excess, which means that the top, I'm going to try to go across, the top would be very flattish like this. Like, see, this top is very flat. It only has 2 ticks here, but it can get even flatter than that. There are often poor highs where you have nothing on top. And that could easily be a setup where you would get a sizable move back, because what that implies, especially if it's at the high end of a range, is that longs have essentially painted themselves into a corner, and all the short-term traders in that session, when they got to that level, they were very fearful, and they couldn't get that capitulation move to make that burst to end the auction properly. The auction ended improperly, and they're all kind of stuck there. And the next day, those are going to be the first sellers. These poor highs are very often very, very reliable signals that you can pretty much kind of short into the close of that poor high and cover in the overnight session. And why I say that the poor high may be actually a trigger of an end to this auction is I think everybody is probably going to be waiting for that excess high, which may fool people and it may not come. And B, when the poor high comes, it will trigger selling the next day. And then that selling could beget further selling, right? If we have that just those people that are last in, first out, selling after that poor high, and maybe you take out one day's low before you, which, think about it, that really hasn't even happened in a while. Like, we're not even making fresh 2-day lows. We're not even taking out prior day's lows. But let's
Right.
just say we do. There is potential, obviously, in this market. We come into January, now you have tax sellers, maybe
Right.
more sellers join the party, but only if, right? It really, you have to keep that in perspective of that lower prices can only occur in one way. How is that? More sellers than buyers, and stronger sellers need to join the party. And I'll just leave you on this note. That is one of the really beautiful things the market profile does for us, is that it leaves footprints and shows us where strong buyers versus weak buyers exist, or strong sellers versus weak sellers exist. A lot of people only look at two-dimensional charts, so they don't really understand when stronger sellers are coming into the market, or stronger buyers or weaker buyers, longer term activity versus shorter term activity. The profile shows us a lot of things about that. I will tell you, certainly from experience, I have seen no evidence in quite a while of longer term or stronger selling activity in this market. It just does not exist right now. I believe the
Okay.
potential is there for it to come in, but nothing right now.
All right. And what kind of time frame do you use this? Would you consider yourself a swing trader, scalper? I hear you talk about overnight trades. Do you use this for intermediate term,
Yeah,
long-term positions?
it's most commonly used in the futures world for
Okay.
day trading of futures.
Okay.
I day trade stocks somewhat, so I will use it for that. You can put the profile on stocks, but more importantly, what I think it is just a fantastic sort of fourth or fifth market internal in your arsenal to help you with market direction and show you where key levels are in the market that you'd be using as signposts. That's one of my favorite words, is
Like it.
using these key levels, such as the point of control, the value, the high, the extremes of the value area, whatever. Use these as signposts in your trading, regardless of your time frame. So if I'm a swing trader and I'm long on a Monday and my target is Wednesday or Thursday, I want to know if a gap is being unfilled, or, hey, look at that, we were supposed to touch the point of control, we didn't, we gapped and held. Okay, that's bullish, I'm holding my position. You see, so when these
Right.
signposts are tested or not tested, it helps you really, even in the longer time frames.
Yeah, you're always taking in the new information and reassessing, right?
Right.
So you teach people how to use this?
Absolutely. I write a report every morning called the
Why don't you
Peters
show it?
Yeah, let me show it to you. It's called the Peters Pre-Market Perspective, and I'll be glad to show it to you. It's actually here. Let me just bring it up. And I have a a few sample issues here on the site. I don't know if you guys can see that.
Here it is.
There it is. Okay. So this is some information about it. I do offer a 1-week free trial. If you're interested in getting this, you can sign up and you get the first 5 days on me. And if you want to see what it looks like, you just scroll down here. There's some sample issues. And I will leave you with this because it's important, is the first sample issue here. This has a list of all of the virgin points of control below us and all of the gaps below us. There's a number of unfilled gaps below us as well, and that's also important. So I just wanted to point people to that. But if you want to see a
Cool.
free issue or a number of free sample issues, what this looks like, that top one does have all of those VPOCs listed in it.
Okay, well, Peter, I want to thank you so much. It's really nice to meet you, and you're a real passionate guy, and I could tell by your temperament, you're a very good teacher. And thanks for giving us a little glimpse into what you do. And I find it fascinating, to know where the players are and what's going on. And always nice to have another arrow in the quill, right?
Absolutely. That's all this is. Absolutely.
And like it or not, you know what you are now going into Christmas? Is my Christmas gift to you. You're now
All
my
right.
trading warrior brother, Peter Resnick.
Thank you, sir.
You take
Happy
it?
holidays to you.
All right. Well, everyone, the best way to follow Peter, you could go right to his website, shadowtrader.net, or on Twitter, you just go right to his name, at Peter Resnick,
That is correct.
Reznick. Merry Christmas, Peter. Happy New Year. I hope pips just fall down on you like the thunderstorm we're getting in San Diego today.
All right, Dale. Thank you so much. Take care.
All right, buddy.
Bye.
Good hunting. All right,
Bye-bye.
everyone, that's it for the rest of the week. Merry Christmas. Tell the people you know that you love them. They're not mind readers. And don't just count your pips, count your blessings. And see everyone again, I believe, next week. Adios. Thanks again, Peter.